Hey everyone, welcome back to the channel. I'm Doug, the retirement guy with all the monthly ETFs. Today we got a review of the DIVO Amplified CWP Enhanced Dividend Income ETF. This was requested by a couple of our Patreon supporters and actually a couple of our YouTube membership. If you are part of either one of those, we're always happy to help you guys out. If you're not part of the channel, don't be afraid to hit that subscribe button, hit that bell notification. You don't want to miss one single episode of our videos. So today we got the DIVO, the fund that delivers, the monthly dividend fund that actually works. We're going to explain it all and give you all the details of this fund. And let's get into today's video.
Notice to all viewers, this past performance does not guarantee future results. This information is for educational and entertainment purposes only. This is not intended to be financial information. If you need financial information, always contact a financial advisor.
So what is DIVO? Well, it's an amplified CWP enhanced dividend income ETF is designed to provide monthly income and potential capital appreciation. It distinguishes itself through a balanced strategy that aims to avoid the pitfalls of many high-yield income funds. So to give you some of the statistics that they have, the dividend yield is about 4.8%. Annual payouts about 2%, or excuse me, $2. Monthly dividends about 17 cents. It holds about 30 different holdings, and this thing was been out since December 14th of 2016. When we look at the holdings, you're seeing the Apple, you're seeing Visa, American Express, Goldman Sachs, Caterpillar, Microsoft, a lot of popular names out there. So some very, very strong holdings in the companies. So the high yield trap problem. Many high yield ETFs promise attractive income, but often fall into what we call a yield trap. And that is where the distributions are largely composed of return of capital. This has led to erosion of the investor's principal over time, undermining the long-term value of the investment despite seemingly high payouts. So when you have a high yield ETF that uses ROC, they will always promote it as a tax advantage, which it is, but the underlying part of it is you will actually see your principal erode and the principal will decrease over time. So you're got to take your high yield to refund your principal. DIVO does it a little bit different. They're a sustainable approach. They're trying to get you where their principal stays stable. How do they do that? Well, sustainable income. DIVO focuses on earning income rather than return of capital. They're providing more sustainable long-term returns. As we talked about, buying higher quality companies, buying stocks that pay their own dividend. So there's a lot of pieces to their puzzle, and they try to do more of a balanced approach that aims to balance the income generation with capital preserve to avoid those pitfalls of high yields. Let's take a look at how they've actually done in just this year alone, the year to date. Even with the April 2nd drop off, which you have to agree, you see this on almost every ETF fund that we've reviewed. In April 2nd, they've all had massive drop-offs. But look what it's done since. It's climbed out of that basement from the low $37 point all the way up to a $45 price point as of time of making this video. Now, of course, these numbers will change hourly, minute-wise as the stock market is open. But you have an 11.41% already in growth in this year. When we take a look at the history of this thing, and this is why it's always nice to have a fund that has long history. We're almost 10 years into this fund. You look at each and every year, it's getting you back between that 13 or that 12.5 return as high as 15.71% return. So it has a strong track record over time And this information comes directly from DIVO on its own. When you take a look at comparison of DIVO to three major markets, S&P 500, XYLD, and QYLD. Now, I've personally have bought into XYLD and QYLD. It was one of my first funds that I jumped into with the high yield. And I've had to learn about NAV erosion. I had to learn about how this works with return of capital. And I wish I would have known about DIVO back then. But when we take a comparison, a 5-year total return, which is including your dividends and your valuation of the fund, the S&P 500 hits 94.6% return. This is why most people always say just put your investment into S&P 500 and let it grow until you get to your retirement. Well, DIVO does a very similar to that at 83.04%. XYLD at 48 and QYLD at 42 are very respectful, but you almost doubled your funds in DIVO alone. So DIVO's outperformed both the QYLD and the XYLD in total returns by a significant margin. And over the 5-year total return, DIVO is right on the heels of the S&P 500. So income distribution breakdowns. How does DIVO come up with their monthly distributions? They use three primary sources. Number one, qualified dividends. Regular dividends from underlying stocks in DIVO's portfolio. These represent earnings from the quality companies. Okay, they're also tax advantaged when they're held into a retirement account. So that's a very important part of DIVO's strategy. The next part they do is their option premiums. Income from writing covered call options against stock holdings. It provides additional income stream. This will enhance the total return potential of the fund. And then the third one, and this is an important one, this gains. It's called capital gains. It gains from selling underlying stocks when dividends fall below a threshold. Balances the portfolio out. So as they're balancing, they're gaining capital gains. They're selling things for a profit. This provides a flexibility in income generation. So when you look at their pattern that they're doing, you have the capital gains in blue, you have the dividends in green, you have the options in yellow. It gives a total package of distributions of how they're generating the income. This gives you that potential of a steady cash flow. So let's take a look at that dividends, and you'll see the growth. We backed it up 5 years, so you can get a good picture, and I always call it a good running start to look at this. But basically from January of 24 all the way till now, you've seen an increase in their distributions. And I believe that comes from the options trading that they're aggressively going after. The bottom chart you'll see is the growth year over year. And we broke it down realistically. We try to do it by month or break it down that way. And you can see that they're averaging about a 10% growth in their dividend. So I know we're going to look at this and say, 4.5% yield is nothing spectacular. But when you start adding all the pieces together, a growth, a dividend that is growing, you can see on both charts that it does. You're seeing a 14% growth in the fund as a whole. It starts adding up some big numbers. So this is one also that I kind of fell and looked at and said, oh, this is a huge advantage. Strategic use case. One of the things when I did my research on DIVO, and again, I highly recommend that everyone do your own research and your own thing to see if it fits your portfolio. But DIVO offers a strategic solution for managing the required minimum distributions from inherited IRAs, particularly under the current 10-year drawdown rule. So what they do, the approach allows the beneficiaries to meet their annual distribution requirements without liquidating the growth-oriented assets prematurely. So DIVO is, really has allocation of a portion of the inherited IRA to DIVO. Utilize DIVO's monthly distributions to satisfy your RMD obligations. It preserves your growth assets in your IRA and avoids the reinvestment of DIVO dividends. So you're cashing out those dividends as your cash outs. So it helps you down the road to manage your long-term money. So the benefits of an inherited IRA strategy is using DIVO ETF as an inherited IRA provides several key advantages of beneficiaries. Well, you got cash flow generation. You have the potential that you're going to have a regular cash flow coming out of it and giving you those monthly distributions to meet your RMD requirements. Simplifies the complexity with withdrawing rules, and provides predictable income without liquidating your assets. Assets preservation. It preserves the growth-oriented assets of the IRA. Another big thing. So your funds will continue to grow in over time. And also you have the tax liability management of the rules of an IRA. So the pros and cons, DIVO offers a balanced approach to income investing and distinct advantages compared to other ETF funds. The monthly income potential of having a regular monthly dividend payout provides you that cash flow that you need. And you've seen that is actually on a growth perspective. Capital appreciation. You have the potential of the cash appreciation of their fund, because they're buying the higher quality dividend stocks in their portfolio. You're gaining real earned income. Minimizes any capital gain distributions. What they're doing is they're giving you that 3K strategy to create real income versus just working off of options. And the other pro is it outperforms the competitors. Now the cons, it does have a lower yield than pure income funds. And I know no one's going to jump up and down and go crazy and saying, I'm getting 4.58% dividend potential off of my fund. When you look at something with QYLD and so on, it has that higher value. But when you look at the hardcore numbers, when you look at the truth, you're preserving your cash, you're creating an income, and you're coming across, and that's why I bring you back the chart. Over 5 years, someone with QYLD grew your fund at 42%. More power to you. I encourage that. But when you look at a DIVO investment in the same exact period, it came out to be 83.04. I would take the 83% over the 42 pretty much any day of the week. So who is DIVO for? Well, my opinion, and only my opinion, my choice is income and focus investors. People who want to have some income with growth and work together. Do you want to seek sustainable monthly payouts? I think this fund can do it. You got concerns about principal preservation? This one shows you the way it does. It's wanting real income. It also gives you the IRA benefit. So if you're into retirement, you have IRAs, this is a piece to put into your IRA to help you down the road. And it gives you that strategic portfolio builders. This thing is doing, it's looking for capital appreciation. It's looking for the higher quality items. It's not a real gamble out there. So it's really designed for retirement portfolios. So my final thoughts is this, is investment research. Always conduct your own research through this. Always determine if this is going to fit your personal financial goals, risks, overall portfolio strategy. As I am into retirement, I have some IRAs, but I've never really been big in IRAs. But this one here will definitely be added into my IRA, just strictly for the rules and policies that you have to face. The DIVO ETF position, I love what they've done there. My personal opinion, I like how they set it up. The 4.5% does not get me excited, but the 14% plus 4% for an 18%, it gives me something in my portfolio to grow on. So the whole strategic application with doing the IRA package is an added bonus to the whole thing. So I want to just make sure you guys all know, I got to do a disclaimer here across the board that this information is for informational purposes and entertainment purposes only, and that should be considered financial advice. Its information is based on data available on November 12th of 2025, and past performances don't guarantee future results. Investments in dividend-focused ETFs carries a risk and includes the potential volatility in dividend payments. Make sure you do your own research. But guys, I'd like to know, what do you think of DIVO? Is it something that you'd like to have in your portfolio, or is it something that you're just not big enough that you're going to look at other things? Let me know in the comments below.
Thank you for watching. Press the like button, hit the subscribe button, and join. Leave any comments below and join our Patreon to support the channel. I'm Doug.